Hi, and welcome back to Stock Talk. So today I want to do a follow-up to a question that I had. And actually, it's an underlying theme, questions that I've gotten from subscribers as well as viewers of the show. It keeps coming back, so I think I really need to spend a few minutes during the lesson part to discuss this. And it really has to do with what is my priority. I look at all these different things, the price action, the moving averages, MACD, ADX, and everybody seems to want to know, what is like the priority of influence for me, or what is the most important indicator, and this and that. So I want to go into that, and I think the easiest way to explain it, I think, is you want to kind of look at it like an orchestra. Which might sound a little crazy, but we've got the stringed instruments and we've got the brass and the woodwinds and all that, and they all play a role in the orchestra. And at certain times in the music, one might play a bigger role than the other. And I think that's how you have to look at these indicators. It's not really a one or other always. It really kind of depends on the environment and what the market is telling us right now, what type of conditions we're in. So that's really what I want to talk about today. Want to get into the agenda. So it's really what I would consider to be the key indicators that I look at in their order of influence. And so I do look at all these different things. So for trend, I'm looking at price, I'm looking at price structure, I'm looking at the moving averages, I'm looking at Fibonacci retracements in specific times. And then momentum, I primarily focus on MACD and ADX for momentum. And then obviously relative strength kind of is its own category, but very important nonetheless. So once I go through this and sort of explain what I would consider to be the order of influence for me, I want to go through all the stock requests that came through over the last couple weeks, since we did have a break there for the holiday. So that definitely a decent amount of symbols came through, but I'm going to try and get through them all for the show. So before I get into that, just to let you know, my services can be found at rabilstockresearch.com. I send out about 2 to 3 reports each week, primarily focused on trying to identify stock ideas for people. But I do mention and discuss the market environment, the individual indices, as well as the sectors. So take a look at that. I am still offering a discount using the coupon code StockTalk. So plug that in if you're interested. So let's go ahead and get into this discussion. And I decided in doing this that I was going to just use the QQQ. I mean, I rarely look at, for this show, I like to talk about individual stocks and some, I don't mind discussing ETFs and all that. And if someone really wanted me to look at any individual market, I could do that. But I just figured it would be easier just to use this in a general fashion using the QQQ in terms of how I go about kind of looking at things. So I've got the monthly chart in the bottom left, weekly bottom right, daily upper right, and then another weekly. And I've got the price chart actually, and I've added in the zigzag to show the price structure on the weekly chart. And I've also got the relative strength line versus the S&P with the 30-period moving average with the relative strength line. So this is basically my orchestra. I've got everything lined up in here. And when I pull up a stock for a client and he calls in and he wants to know, what am I thinking? I'm sort of looking at all of it at once, but I would tell you that I'm focusing on these bottom 2 frames first. These are kind of like my 2 priority frames. I'm looking at the monthly chart and the weekly chart. And price is, if I'm going to stay on this orchestra kind of analogy, I would say it's almost like the violin section, or the concert master, whatever you want to call, the lead violin is price. It's kind of like I think the most important thing that we want to focus our efforts on, and everything else is going to support price. But I would say if I'm going to just look at something really quickly, the first thing my eyes go to is going to be the price pattern. in both the monthly, and then I'll take a quick glance at the weekly. Because I generally want to see, even if I want to trade it off the daily chart, I generally want to see what type of environment am I looking at. Because if I'm going to trade, even for say a 3 to 10 day trade, a short term like swing trade, I like the wind at my back. So I want to see, an underlying theme that shows me support based on the monthly chart and the weekly. Now, once I look at that and I see something that's intriguing based on the monthly and the weekly, then my eyes are going to glance down and I'm going to look at the ADX. And so when I'm going through and browsing a big list, so let's say I run a screen, or I just have a big list that I go through. I've mentioned before, probably 500 to 600 stocks that I go through at least 3 or 4 times a week. And when I'm doing that, again, I'm focused on the monthly and the weekly price pattern. And with that, I also see the moving averages. I mean, I can't really see price without the moving averages. So those are somewhat of an influence in supporting the theme. And the way I look at the price and the moving averages, price is the most important, but I use the MAs in conjunction with price to improve my ability to see price structure and the trend. And so they come in and provide a really nice supporting feature for the price itself. Now, once I'm done there, then I'm going to look at the ADX and see what kind of position it's in. Every now and again, when you look at price, it's giving you a slightly different picture than what you might expect from the ADX. So, I mean, just to give you an idea, like the QQQ was showing a really nice trend with the 18 above the 40, and it really has remained that way throughout this whole picture. But if you notice, the ADX has gone through periods where the ADX was not as strong. Even though this was really okay, we saw enough of a deep retracement here that it actually hurt the ADX trend a little bit. So these are things that are going to tell us just how strong the environment is. And despite the fact that the market has continued to trend to the upside, this can be a very nice influence. And I really like using this when I'm trying to pick out what stocks I want to trade. I really want to go and look at the ADX to see where, if I want to filter it down, if I have 10 stocks or 20 stocks that look attractive based on both the price and the moving average environment, then I want to go down to the ADX to limit that, say maybe cut it in half or reduce it down to 3 or 4 that really meet the type of criteria that I'm looking for. So I would say that's kind of the order of influence there. Now, the one thing I want to mention is that when price starts to expand in volatility, and we can go back and look at the period in 2020 when the market really cracked to the downside and we got a massive amount of volatility in the market. The size of the bars increased dramatically, and when that happens, ADX does not play as big a role for me. I don't really look at ADX at bottoms in most times, because when a market is bottoming, normally the volatility is exploding. And when the volatility explodes, ADX is going to lag. And so you have to just take that into account and recognize it. I'll probably lean a little bit more on the price action, the fib retracements, and the price structure to really help me. And then I'll look at the actual individual bars. I'll start looking at, bottoming tails and or reversal bars, big green bars, big red bars, to really help in that kind of environment, both on a monthly chart and a weekly. So those are the types of things I think you want to be on the lookout for. We're in a trending environment that has low volatility. That is a really great time to focus on ADX. And then I don't want to leave MACD out of the equation. When I'm going towards entry, if I know, so I'm using the ADX and the price pattern to help me identify which stocks I want to own. And then when I'm looking at the timing, I want to go and look at the price pattern again. I want to look at the MA lines, but I want to focus on MACD at that point, probably a little bit less focus on ADX and more focus on the MACD when I'm looking at timing and entry pattern. So I think these are all pretty important things that we want to recognize and understand. The relative strength plays an underlying importance to me, and it grows in importance when the market drops. When we go through a bearish phase for the market, I want to go and look at relative strength stocks. When the market has been going up forever, I'm probably a little less focused on relative strength, because I don't really want to be caught in the strongest relative strength stocks when the market peaks. So anyway, that's kind of my outlook. I wanted to do this and try and get it in under 10 minutes so that we have plenty of time to go through the individual stocks. Let's go ahead and get into that now and look at some individual names, and we'll go through this as we talk. Okay, so I've got my live charts up now, and just before I leave the QQQ, the one thing I want to point out is the fact that if you look at the monthly chart, notice how long it's been since it touched the 18 on that time frame, and it's been almost 2 years now. And just recognize the times that happens and what follows. You know, we can go back and kind of look at that. There are times when that takes place, but we're getting up. I mean, I'm not trying to make a market call here. I mean, I think we're starting to show signs that the market's getting a little tired. Obviously, a lot of volatility showing up recently. But more important to me is that we've gotten this move and we haven't touched the 18-month in a while. So this is something really important to look at in the stocks that you're looking to buy. Make sure if you've gone through a long period before touching the 18 in any time frame you're looking to trade, then you need to be careful. All right, let's go ahead and get into the first symbol that came through was this cane sugar fund. So actually, there's kind of a theme. I do have some different ETFs and a few commodities in here this time. So if we look at what the how this is turning around, we've got the 18-month line rising now for the first time in a few years. Really good momentum characteristics, but notice how we just broke the 18-week line. We've been working sideways, and now we've just broken the 18-week. So once that happens, and this looks like this 18-week is about to roll over, I'm sort of the opinion that this is now going to take some time. We're probably going to work our way closer to support. There's major support is down around 8. There's probably a little bit better support around 8.25, something like that. So, that I think this is a type of stock that we can, or ETF that we can wait and watch. I don't think there's any big hurry, just based on the recent break of the 18. Now, I know a lot of the symbols that came through 2 weeks ago before we started to see some of this deterioration. And so just want to make sure I cover these anyway, even if you're not still necessarily interested in buying them today. So let's look at BlackBerry. So BlackBerry has this kind of odd shaped pattern, the way this is developed. And notice these big spikes that took place. And that really does help the ADX. And you have to know that even though I don't think these are big tails, I don't think those are very attractive, they're actually helping the ADX, and they're helping the ADX here too. So I think you have to realize that it maybe looks a little bit stronger than it is, just based on the fact that it looks like there's pretty good problems around 15. Now, just recently in the last week or two, we've kind of broken down back through the moving averages. So we're testing some key support, down in this area around $9. So I would want to give this some room. It needs to, a minimum, go back up through 10.5 and get through these weekly moving averages before I'd even consider it again. But just recognize that the ADX is showing that it's a little stronger than it actually is. Let's look at Cleveland Cliffs. Now, one of the things I did want to point out is, and what I do like about having the zigzag up, I mean, I think you can really see sometimes where we're breaking the trend line. You see you can use the higher bottoms and draw in trend lines pretty cleanly. We broke the trend line, we came back and tested, and when we tested, the relative strength was not confirming, and in fact, the relative strength had broken its own trend line. And then look at the top. We didn't really have great momentum confirmation there, but worse than that, this test here, right here, we definitely started losing momentum, and the ADX was crossing back below 25 after a long period of being above 25. So I think this is it's going to take a while, and I think it wants price to catch up with the 18-month line. So I could see this spending a few months at least in a consolidation or a correction pattern. So Rio, again, let's just look at this. This happens on a regular basis if I'm drawing in my trend lines using the zigzag, which makes it really simple to see where the bottoms are. So this is the high. You go back to the last low prior to the high, and that's your anchor point, and then draw a trend line through that. And if you do that here, we broke the trend line, tested it, and on that test, we had already broken the trend line on the relative strength. We had a pretty nice rally up to the 18, which was rolling. Look at the deterioration in the momentum based on the MACD. So all these are, I want to point these out when we get extended above the 18-month line. These are the types of things you want to be on the lookout for as an exit strategy if you're looking to be more of like an intermediate term trader. If you're long term, then you might not have reacted as strongly here. But if you're anything less than really long term, then I think you'd want to have done something. Now we're coming into pretty good support, but I think there's a little bit too much damage done. So I think we need a little bit more time here to let this back and fill. It needs to almost rebuild a new base of support before it's ready. But I don't think there's a lot of downside risk right now based on how much support there is. BNTX. This is a stock that had a pretty deep retracement. And I mean, this actually qualifies as a reverse divergence. If I'm looking at this, I've got a higher low here and a clearly lower low in MACD. So we're getting a pretty good rally off of this. What I don't like is this reversal at 400. It looks like a pretty strong resistance zone up there in the high 300s, 400 area. So I think this is a tough one to want to play, and it's pretty volatile. So I kind of expect to see more channeling sideways, and it should quiet down a little bit before it's really ready to go again. Remember, like I talked about last week, look at the big run and then look at this big topping tail on the monthly chart. So you knew way back in June, August, July, August, something like that, we were really showing signs that this was getting toppy, okay? Amazon keeps working sideways. I mean, we haven't broken the 18-month line, and we can see there's pretty good support around 3,200. If we break 3,200, then we're going to come down and test this area right around 3,000. 3,000 has been the big level for quite some time now, since this started working sideways in 2020. Really haven't moved up. So the question here is, do we hold 3,000 or do we hold 3,200 right now? That's kind of a key level. And if we don't, then then you got to start looking at 3,000, and then we got to decide if we've broken the 18-month line, how much risk is there? So the quality of the break of 3,200, if we actually get that, will be very important to see in terms of volume and the price action and all that. But right now, it's still a neutral camp, and 3,200 is very important. Nvidia is a completely different story. This stock has just run away to the upside, and now the biggest monthly bar, look at this monthly chart. Look at how big of a move this has made, and now the largest month was last month. That's the biggest move it's made in a single month if you go back since the move started. That tells me this is getting late and getting somewhat exhaustive, but it doesn't mean that it's necessarily going to go down this second, but maybe early next year. It might do it right now, but I would say it's probably more likely after a strong year. Next year, we should probably be looking for some type of a corrective pattern, at least in the first quarter or first 6 months, something like that. Now, it'll probably hit new highs first, unless the market really decides it wants to drop right now. But let's go ahead and look at silver. So I've got a few commodities came through. We're going to start with silver. I don't like the overrun of the 18-month line. When we look at this, we've got a pretty nice looking pattern, pretty nice breakout here. See that great breakout and pretty good momentum conditions when it broke out. But now we've pulled back. We spent a long time going sideways, and now we've pulled back, and we've got this overrun of the 18-month. And in fact, after it broke down, it tried to rally back up, and it couldn't get through. So now this is starting to act like a little bit of a barrier here around 25. So I don't know that I'm all that interested in this unless it can get back up through that level. And we can also see that the 18 on the weekly chart, the 18 is below the 40 and both lines are declining. So until we can get back up through 25, I don't think there's anything going on here. I wouldn't be in a big hurry unless we started to see some better improvement. And if I get a breakout to the upside, I really want to see green DI confirm that move. You see how green DI has been below 25 basically this whole year. So until that happens, I think we don't really have much going on. Gold tried to make a little bit of a run. It had a little move to the upside, but then on the retracement, it just really gave it up. And we can see again, there's no green DI on the weekly chart. The weekly chart should be kind of like your central area. I like to think of it like that's my middle time frame, my main time frame, and then I look at the higher time frame and I look at the lower time frame. So if I'm going through and looking at the charts, I know I say start with a monthly. The reality is I'm looking at both of these, and depending on how well I know the charts, because I'm looking at these charts every single day, I might not look at this first. I might actually look at the weekly, and then I'll be able to recognize pretty clearly whether this is attractive or not. But both of these are important, don't get me wrong, but sometimes I actually might favor the weekly because that is the kind of the main time frame for me. And then I'm using this to help with the timing and this to help with how much upside I have, or, is it a trend that's been in place for a really long time, or is it just starting? That I think is a good way to look at this. So let's look at the crude. Obviously, with the noise and what's happened in the market here recently, we took out the support around 75, 76, and we did it in kind of a violent way. I mean, we could really see that on the daily chart. That's pretty nasty selling. I think we've got now what was support, 75, 76, is now resistance. And we're now looking at the next support zone. Probably, let's just see what that level is, right around 62, 63. So the way this is coming in, based on the velocity of the decline, I would not be looking to be a buyer the moment this comes down this level. So I think we've got a little bit of time, backing and filling, working sideways. And when we find support, that should at least identify where the trading range is going to be. Okay, let's look at copper. Now this is, if we look at this and go back and look at something like crude or whatever, look at how well this is holding up. Or go look at gold and silver. I mean, this is a much stronger commodity, big move to the upside, and we've just been working sideways and still have a lot of support at 4. Now, we might go back down and test that level at 4 again. And it's possible we'll get maybe an undercut and rally pattern. So if this is support, maybe if the market gets kind of ugly here, we get an undercut and then we'd be looking for a reversal. But MACD's in a pretty good position. It's been working off its overbought, and we have low ADX, and we don't have any strength in the sellers on the weekly chart. So, I'm inclined to think that there's more upside coming in this, but it probably needs a little bit more time to let the 18-month catch up. Maybe this meets up with it around 4 or a little bit above 4, but maybe it works sideways for another month or two. Okay, got a question on HP, and they were asking how to handle this gap up. And I think for me, this was a stock I was highlighting in my reports as this was developing here, right in this zone here. We had a zero line reversal, we had low ADX, we had a nice consolidation back. Look at the pinch on the monthly chart. We had ADX holding above 25, and so was green DI during that period. So I thought this looked really attractive, and I think you could have really been looking at this if you're going down to the daily to help with the time, and you get the little move up and then the little test. I mean, that was pretty ideal right at the breakout level around 30 bucks. Now, after the gap up, I'm actually looking at it coming up and testing this prior high. I would actually be looking to be maybe trimming it. If I bought it here, I might be trimming it a little bit, not a whole lot, maybe a little bit, and then moving my stop up to break even, and then see if this can turn into a big win. The way this is reacting based on how strong it is relative to the market, I think is really encouraging. If I'm looking to be a buyer in this now, I've got to wait. I've got to wait for at least a pullback to the 18-day. We're too far away. And since the gap, we've been too far away from the 18. We needed to come in to the 18-day, preferably closer to this 32, 33 area where the next level of support is. And you have to evaluate the pullback. If the pullback is very violent and strong to the downside, then you have to give it more time. I'm a little concerned if this turns around and has any kind of a violent reversal, it's going to look more like a failed breakout on the weekly. But right now, the conditions look good. I would consider this more of a hold right now than a buy. Okay, let's look at Micron, because I think this is, so I continue to bring up the same pattern over and over again. This is basically the theme in my book, one of the major patterns I like in my book, and that's this 2 time frame, strong move on the upside, and then we pull back. And we've got a pretty good reading of ADX on this side, and then we pull back to the 18-month. Now, I don't like to just buy on a single time frame as it comes into this support. Now, based on last week, you see what happened. We pulled back and then we got a little bottoming tail. Now, it wasn't a big bar, but it was a bottoming tail. So that gave you the first sign that, okay, we're coming into a pretty key support and we've got a sign of a reversal. But I'm still going to look for a pattern to develop on the weekly chart. And I want to, at a minimum, I want to see it break the downtrend line. And this had some overrun. You see how this overran the zero line? When you come right to the zero line and turn, then I think you can buy right at the trend line break. But now, because this overran like this, I would actually, and we did, you could have bought on the cross of the 40. That is a signal. I mean, there's no doubt that's a trigger. But because we've been up 3 or 4 weeks now, I would actually look for the first higher low, first pullback. And it should happen as it's pulling back towards the 18. If it does that in an orderly fashion, then I really think that's the first quality setup where the 18 on both time frames is really in agreement, and we've got a trend back in alignment where momentum's starting to improve. So that's how I'd read that right now. CGNX was pulling in as well. It was more like a sideways consolidation, but now there's deterioration. You see how this is not holding support? So this is kind of coming off my list. If it were off on my watch list over the last 3 or 4 months, now we're breaking support. I'm going to kind of take this off the list. I don't like how it's overrunning the 18-month. I don't like the MACD overrunning a little bit. It tells me it's going to take more time. Now, this is a good one. Someone sent in the capital markets ETF. Look at what's taken place. And this ADX pattern is so important to recognize. So we're going up in price and we're making higher highs and higher lows. Pretty good trend. And ADX is confirming. This is strong confirmation here. Really high reading. And then we pull back and we make another new high. And notice this crosses down below 25. And then on the rally at this peak, it does not get above 25 here. So every time you make a new high, and you have a clear new high based on the green, you want to make sure that the ADX at least crosses above 25. And if it doesn't, it's telling you this trend is getting really tired and that we should be on the lookout for some kind of a retracement, or probably even something more important, maybe even a reversal of the trend in that time frame. So if I'm in the weekly chart, I'm looking for this to break the 18, not just pull back to it. So that's something you want to keep in mind. Now go and look at the monthly chart. Look at how far away this has gotten. So these are all key things to keep in mind. This should come in, spend some time correcting. Okay, let's look at Dow Holdings. Here's another one where it was pulling back and we had an opposing trend develop on the weekly chart. Everything was looking okay. We didn't really have strong sellers. And then we overran just recently, just in the last, really during the course of this week, we've overrun support. And we still have a declining 18-week. We've never been able to get back above. There's no trigger in this. So if this were on your watch list, you should be taking it off now. Also, look at CCL. Notice how this was pulling back. And this is the case for the airlines too, trying to pull back and hold the 18-month, and we did not have a signal to the upside, and now we've broken the 18-month line. So got to be very careful here. I think there's enough damage now that we want to take this off our watch list. Okay, well, we've run out of time. Thanks for tuning in. My contact information is listed. Please feel free to reach out, and also send your stock requests to StockTalk at StockCharts.com. Have a great week, and we'll see you next time.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.